You've made a great decision to join us on the Wall Street Unplugged podcast for this Thursday, December 15th. I'm your guest host, Daniel Creech, research analyst here at Curzio Research. Yes, I'm the one filling in for and working alongside the one and only Frank Curzio, who is out of the office on a personal matter right now. And because of other scheduling conflicts, I'm actually recording this later on Wednesday. So we're going to peer into the future, but have no fear. I have a couple of very important topics I want to break down for you. The Federal Reserve meeting was today, and the Fed came out, raised interest rates, and then Fed Chair Jerome Powell's Q&A that followed. I took several notes. I took the time and effort to listen to that, so you don't have to, and you can just catch the Cliff Note version. I'll keep you up to date and let you know what stood out to me on that. And then secondly, earlier this week, there was a hearing with the now current CEO of FTX talking about the mismanagement and, for lack of a better word, failure on FTX and why. But on Wednesday, there was a Banking, Housing, and Urban Affairs Committee hearing titled Crypto Crash, Why the FTX Bubble Burst and the Harm to Consumers. I'm going to go over that. I watched the video, the recording, because it was actually on at a different time when Frank and I were doing the podcast for earlier this week. But I want to highlight a couple of the witnesses there, a couple of the back and forth on the politician side that it was very similar to the first FTX hearing. But anyway, I'll share with you what stood out on that, kind of a macro and big picture item there. If you listen to our Wednesday episode of Wall Street Unplugged, where Frank and I were going back and forth about the upcoming Fed meeting, we basically didn't expect anything out of the ordinary. We thought that that the Fed would raise at 50 basis points. That is a step down from the 75 basis points they've done several times in a row. That's exactly what happened. And the market reacted. The market sold off. So I was taking notes at this, and the market was up. I'm just saying the Dow was up over 200 and some points. NASDAQ and S&P as well, all up. And then as soon as the announcement for the rate hike came in, markets sold off just in a straight line. So we went from up over 200 on the Dow to down over 100, I believe, very, very quickly. Then to start, let's see here. So Powell's Q&A started, and the Dow was down 117 points, NASDAQ was down 70, and the S&P down 20. When he took a question about over halfway through the Q&A, the Dow went down to over 300, the NASDAQ down 150, and the S&P down over 40. So things kept selling off as he was answering questions. I'll get to that in just a second. But then, because Frank and I called this, it was going to be a trader's market. And if you're going to look at this, the only way to look at this is in the short-term stuff, because it really, nothing the Fed did today in raising interest rates, or yesterday, changes the outlook for the markets over the next several months. This is all just right before the holidays, tight trading sessions, a lot of just traders' mentality. And if you want to play that game, that's fine. But most individual investors that aren't short-term, and I mean short-term, almost day traders, can kind of ignore this in the sense of I don't want a lot of people to put a lot of effort behind the day-to-day headlines, because I'd rather you focus on the macro picture, just because it's easier that way to keep emotions out of investing. And it's easier to not get tossed around and then get frustrated on small losing positions, because you're trying to basically time or trade the market, which is very, very difficult for individuals. That only leads to more frustration, moving to the sidelines, essentially throwing in the towel, and then you're going to miss out on massive market rallies to the up and downside. Downside, what you can do through money flow trader and buying puts, long dated puts on stocks that are going to struggle over the next 6 to 12 months. And then on the long side, holding your core quality assets that you want to hold through even recessions and downtimes, because just because market indices go down as a whole doesn't mean every single stock is going to go down. We'll do our best to research and find those, get them into our newsletters. The 50 basis points did not come as a shock. The reason the market sold off right after the announcement was made was not because of the 50 basis point hike. It was because the federal funds rate projection Now, this is the projection of the federal funds rate, which they're raising now, to a higher. The federal board, the people would be Powell. Excuse me, I lost my thought there. Powell and the other Fed governors put out projections, and in September, so I'm going back a month. In September, the 2023 for next year federal funds rate projection was between 4.4 and 4.9. Now, why is that important? Well, because just after this 50 basis point raise, we're now at 4.25 to 4.5. That's where the current federal funds rate is. So when they bumped it up 50 basis points, we're now at 4.25 to 4.50. That's right in between the September projections for next year. Now, the reason the market sold off is because the Fed raised those projections for 2023 to now be between 5.1 and 5.4%. That's a knee-jerk reaction to sell because, as Frank has been talking about for quite some time now, this is starting to make other investors, in my opinion, realize that a pause is not a pivot. So the slowing the pace of rates is one thing. Then that's kind of step one. That's where we are right now. You're lowering the pace of rate hikes. Step two is going to be to pause. Now we're not hiking rates any further. We're going to hold as is. And we know, based on what Jerome Powell said, they're going to hike at their next meeting in February and probably again in March because they got to get this federal funds rate higher. It's going to over 5%. Step two is when you stop raising rates altogether. Again, that's not cutting. That's just pausing. Then you have to figure out, well, how long do we keep rates there until we absolutely know inflation is under control? And then step three is going to be the big pivot word that everybody's talking about. And when will the Fed start cutting rates? No doubt that will absolutely be a huge bullish signal for markets and prices to move much, much higher. We will want to get in and get investors in before that pivot, but we are a long way off. I'll get to that question in just a second. But to just bring you back to scope, the Fed did exactly what they were going to do with raising interest rates. The market got nervous a little bit on the higher Fed funds rate projection. And then we moved to the Q&A. And for the most part, there wasn't much there, in my opinion, on it. Mr. Powell came out and, pulled the heartstrings and talks about how he knows and how he feels and he understands how difficult high inflation can hurt different families. Obviously, those are the poorest conditions and us little guys down on the ladder. And then he said, we raised by 50 basis points, but here's the biggest thing he stuck to, in my opinion. And I totally think this is going to change in the future. So right now I have egg on my face. I look ridiculous because I have said for some time that eventually the Federal Reserve will have to lower its inflation target, it will have to raise its inflation target from the current 2% to something higher. I don't know if that'll be 3 or 3.5%. I just don't think they're going to have the wherewithal to continue down the path to get inflation from its current run rate as of earlier this week, running over 7% down to 2% anytime soon. But in his defense, Mr. Powell stuck to his guns, and he said we are sticking with the 2% inflation goal, and it's not going higher. And so in one of the greatest questions, there was a couple questions on the pace of rate hikes, and Powell came out and said, listen, I'm not concerned about how high the pace hikes are now. It's not the rate of rate increases. It's simply what level do we get to now, and how long do we stay there? He was asked about reevaluating the inflation target above 2%. And I was taking quick notes here. I'm paraphrasing here. I don't want this to sound like a direct quote. However, I'm capturing the most important thing of what he was saying here. He pointed to the fact that changing inflation isn't something the Fed, the board governors, are thinking about and aren't going to think about it. He says it's not the time to think about it right now. Maybe, then he straddled the fence a little bit. He says maybe in the longer run, it's a longer run project at some point. He says, however, but not considering it and won't consider under any circumstances until inflation is heading towards the 2%. I was very surprised. Personally, I was very surprised that the market didn't absolutely sell off on that news. I don't know how he could have been more blunt or more bearish, given the fact that there's already been some rumors around there. And again, I totally think that he will change his mind at some point in the future. I don't think you're going to be able to put up with the crashes that will occur, the slowdown in GDP, the slowdown in absolutely everything economical, if you continue raising rates, keeping them much, much higher than in the short term, keeping them very high without changing your inflation goal. That was my big takeaway. That question, and then there's always a question on, so he says, hey, we're sticking to our 2% inflation target. We're going to keep raising rates and hold rates until we know and we have months of data, more than 1 month reading. So think about that in terms of how long it takes. So you're talking at least into the first quarter through March of next year, at least, to try to figure out this, and then at least another 6 months from there. Just trying to give you a perspective on how to think about these markets going forward. There's always a question about unemployment, and Mr. Powell has been honest, saying, hey, employment needs to go up. That's how you destroy demand. You want to see a slower economy, higher unemployment, because that shows inflation is going to come down. And the question about, hey, depending on different projections you look at, that means that over 1 million people or more are going to be projected to lose their money. Lose their job. How do you feel about that? How do you balance that as you try to guide this economy into a soft landing and avoid recession? And Mr. Powell, I have to give him credit. Again, I'm not one to quick to do that, because I point to the Fed and how ridiculous they are for the majority of, as they should be. But I will give credit where credit is due. He stuck to his guns once again on his hawkish tone, and he said, listen, there's worse pain than just unemployment, and the worst pain would be failing to act and fight inflation. He says, unfortunately, a softening labor market is just part of it. And again, I'm paraphrasing here. He says, I wish there was a less painful way, but there isn't. Higher unemployment is just something you're going to have to prepare and deal with as the Fed continues to fight inflation. That's a big deal as well, because, again, that's telling the market, what are we doing? We're going to keep raising rates. And if you think they're pivoting anytime soon, you're absolutely crazy. As Frank would say, you're insane to think they're going to cut rates next year, and you're insane for thinking earnings are going to remain elevated or projected to be next year. I'll touch on that in just a second. The last point that really stood out to me on this was he talked about 3 buckets of inflation, Mr. Powell did. And he talked about how there's goods inflation, which is the supply chains and, demand has to ease on goods and services and things. And he says we're seeing some strong headway there, meaning that supply chains are getting easier. Demand is softening a little bit for these types of goods and services for goods inflation. Number 2, he pointed to housing services. He did point out that rents are still high and are going to remain high. He said that rents that are expiring and renew into higher markets, but new leases are actually coming down. So that's a positive for them. And he's telling you what you're thinking. So I want you to think, and Frank and I will discuss this going forward, and we'll touch on this. But just for the next inflation data, next month when the CPI comes out for December, you'll want to be paying attention to things like this. And then he said the third bucket that he's looking at, or the Fed is looking at, is non-housing related core services. And that's where you get into the labor market and wages rising. And that will take a long time to kind of work its way through the economy. The case in point here is that I was surprised the markets didn't sell off even harder. They only, they were teeter-tottering. They were up over 250 on the Dow, down over 100, back to flat, and then down over 200 into the close. But the investor takeaway for me is that unless you're a day trader, you could ignore all this. Next year is going to be a very difficult time for market indices. Market analysts, as Frank talked about, are still expecting record earnings, strong earnings growth, yet the Fed is telling you they are not changing their projections, they're not changing their path, they're not changing their tone. They're actually raising how high the federal funds rate will be into next year versus just a month ago. And one last thing Jerome Powell talked about during this press conference was that next meeting, which is in February, they could also raise the federal funds rate again. So they raised the projections from September, and they've done this in the past, but it's going to cause a shock to the market every time because you can just feel it. The market is trying to grasp onto this pause and pivot mentality because most people were bullish, and that's okay. Stocks go up most of the time. However, we're in a period now that high inflation, high interest rates, to where we're going to have a rocky road ahead, for less pun intended. All right. So Frank and I, we could take a quick victory lap on that. We'll talk about that next week. Markets sold off, gave up their gains. Powell didn't really say anything abnormal outside of sticking it to me because he's probably trolling me listening to this podcast. And since I believe they're going to raise above the 2% target inflation at some point, he came out to reiterate that they are not. Topic number 2, the United States Senate Committee on Banking, Housing, and Urban Affairs crypto topic. The witnesses, and like I said, I love this. I love the title here, Crypto Crash, why the FTX bubble burst and the harm to consumers. The witnesses, I only recognize one of these names, and I'm sure you do as well. Witnesses were Professor Hillary J. Allen, who's an American University Washington College of Law, Mr. Kevin O'Leary, who's an investor, Ms. Jennifer J. Schulp, Director of Finance Regulation Studies, Center for Monetary and Financial Alternatives, Cato Institute, and Mr. Ben McKenzie Shrinkan, who is an actor and author. This was kind of split. Mr. Ben was very anti-crypto in his opening statements, as well as every other question he fielded. Kevin O'Leary was your most pro. Kevin O'Leary is Mr. Wonderful, as he calls himself. He's on Shark Tank, which is how I recognize him, and I would guess most of you guys do. Mr. O'Leary made one thing perfectly clear to me today, and that's he's still grasping for that paid spokesman as an FTX partner and spokesman. He admitted to that. He says he lost millions of dollars that basically they were paying him. I want to keep my personal feelings aside from here, but there was a couple of times in the hearing that they brought up Binance, and basically what I'm thinking through is Mr. O'Leary is either got a good plan to get some of his money back and turn on Sam Bankman-Fried, or he's just upset and has this burn it down mentality because he claims, after talking to Sam Bankman-Fried in between the time that FTX was collapsing and when Sam got arrested, that basically Sam Bankman-Fried had to buy back a bunch of the tokens or buy out CZ, who runs Binance. And that was for a huge premium. It was $3 or $4 billion in cash. And that caused Mr. O'Leary, in my opinion, led the conversation to believe that CZ was being a bad guy and a tough partner, and Sam had to buy him out. And that's really what got the liquidity crunch happening. And that's what caused the demise of FTX. The big issue with that is that all glosses over the fact that you had a guy based on the current CEO of FTX, John J. Ray III, who oversaw the Enron bankruptcy, has flat out come out and said that there was commingling of funds and just the old-fashioned bribery, fraud, embezzlement, whatever you want to call it. That all happened a day earlier than this hearing, and yet that all got overlooked, the commingling of funds. Now, this is just in this one aspect of Mr. O'Leary, and that's why I make the joke about him still being a paid spokesman for FTX, even while it's in bankruptcy. Most of the questions from our politicians were either they were so anti-crypto and we want to prove that regulation could have stopped this bankruptcy, why this is just the beginning and we're going to see a lot more of this, or the politicians that are pro-crypto and made a clear point to say, listen, this is fraud and we have to separate just a fraud and a criminal, or alleged fraud and alleged criminal, from digital currencies because it's a software, it's programmable, and by definition, technology programs are not fraudulent. There was a decent argument made by certain sides of politicians to say, listen, you have to separate this, and good things can be used for good or bad. So programs can be used for good or bad. Power can be used for good or bad. And I thought Mr. O'Leary made one good point when Senator Elizabeth Warren was talking about, and several of them cite crypto as fraud and only used by terrorists and gangsters and all this kind of stuff, which is hilarious to me. Real quick, when that is your lead-in argument, I just think that shows that you have a weak hand and you want to distract and not talk about anything else like the U.S. dollar. Because your anti-crypto politicians were talking about how this is trying to take on the U.S. dollar, dethrone the U.S. dollar, and how that was a problem for national security. Elizabeth Warner was pointing out how it's just used by fraudsters and criminals. And Kevin O'Leary made a great point to say, listen, the U.S. dollar is used by fraud and stuff as well. That doesn't mean that the U.S. dollar is worthless. There's plenty of other reasons to make an argument for that. But there's a hell of a military power standing behind it to counter-argue that. All in all, I didn't think that this had much merit. I thought that the other hearing with the current CEO of FTX now was a little bit better just because it shed more light on it. These professors and or authors, they had some good insight. Like I said, they make good arguments about why they hate crypto, why they think it's dangerous. And the other two, in my opinion, did a good job of saying, listen, you got to separate this fraud from the person versus the product. What's impressive to me over this is that Bitcoin continues to hang around the $7,500 level. Yesterday, it popped up to almost $1,800, even during the hearing, and then it sold off just a little bit. But the takeaway here is all of this washing out is great news for the long term. Again, I don't want to get too much into that because I talked about this on Tuesday's podcast. But as investors see stuff, illegal stuff or shady stuff being done, and those people being punished, yes, they could decide to stay out on the sidelines forever and write off the sector. But a lot of people, I think, are going to continue to be interested in it. They're going to continue to ask the questions about what it is. Why are other people interested in it? Why does it have value? Why do other people think it has value? And if there's more coming regulation and you're going to take bad guys out and bad players get served what they deserve, that's just ultimately a good thing. All right, little shorter podcast. Again, we were up against some time constraints. I wanted to try to brief you. Hopefully I made that entertaining. I know this is kind of some boring stuff, but there is a lot of moving parts. The volatility in the market is something to keep your eye on. But again, going into next year, not that you're not going to hear about or hear from us much more, but just keep your mindset on everything you're hearing through now. I would even say January is all going to be short term. Nothing has changed for the next 6 months or longer on why there's going to be a lot of headwinds as inflation and interest rates remain higher than over the last decade. And we're going to have just a wild roller coaster ride. But Frank and I will be here to navigate, help you guys make money and keep your sanity and also entertain you as well. I hope you guys have a wonderful, wonderful weekend. We'll catch you next week. Cheers.